Stocks slid on Tuesday in the biggest sell off of the year as strong economic data left investors once again fretting over the future of interest rates. A survey on business activity called S&P Global Purchasing Manufacturers Index returned to expansion for the first time in 8 months in February, leaving investors to conclude that the Federal Reserve will need to keep interest rates higher for longer to control inflation. The Dow and the S&P fell about 2% each, while the Nasdaq dropped even more than that. Tuesday's plunge comes after a supercharged start of the year. Brad Bernstein, managing director for UBS Wealth Management, says despite investors' sudden jitters, it's still a great time to get into the market.
If we were to get better than expected data this week on Friday, you will see the opposite of today, I think. So you got to stay invested. You got to stay diversified. And I think over the next 6 months, this is a fabulous time to be investing.
Home Depot dropped 7% to a 3-month low after the #1 domestic home improvement chain warned of weakening demand and issued a lower profit forecast for 2023. Smaller rival Lowe's fell 5% ahead of its results next week. Walmart posted full-year earnings below estimates and painted a grim picture of hotter-than-expected food inflation squeezing profit margins. However, the world's largest retailer recovered from an initial decline to advance nearly 1%. While Meta Platforms ended fractionally lower, the Facebook parent had initially been buoyed by confirmation it was testing a monthly subscription service called Meta Verified, which will let users verify their accounts using a government ID and get a blue badge. All of the major 11 S&P 500 sectors fell, with the consumer discretionary sector faring the worst.